I do that?
Classic vacation snap just to show how much better my life is than all of yours. Are you jealous? I'm living in paradise for a week.
When it comes to trading, it is inevitable that you are going to make mistakes. After all, we're only human and mistakes are a part of life. Nonetheless, there are many mistakes in Forex that you can actually avoid if you simply just put in that time and that work and just simply try. Although there are many mistakes that we can talk about in regards to what to avoid when it comes to Forex trading, I've personally narrowed it down to 6 common mistakes to avoid in Forex because I've personally dealt with these mistakes myself in my Forex journey in one form or another. So let's get right into the video. Hey guys, Candace B here, back with another video. Welcome back to my subscribers and welcome to my new ones. Before we go any further into this video, why don't you just go ahead and click that subscribe button since you're already here, right? Alright, so boom. The first common mistake to avoid in Forex is trading without a trading plan. This is definitely a common mistake made by beginner traders. Forex is such an uncertain market that it can literally do whatever it wants, however it wants, whenever it wants. So simply expecting something to happen in the markets does not actually make it happen. The way an individual approaches their trading is what separates the consistent traders from the inconsistent traders. And a lot of traders make the mistake of just trying to take any trade that they see, which throws their risk management rules out the window. They become so self-confident in their trading decisions that they just completely disregard any rules that they have set for themselves. However, consistent traders invest a lot of time and energy into creating the perfect plan and routine and following it. Trading without a plan is like driving without a driver's license. It's like starting a business without a blueprint. It's like skydiving from a plane without a parachute.
She needs some milk!
Being underprepared for what you want to do is probably one of the scariest things ever. And it is true what they say. If you fail to plan, then you plan to fail. Because even if by luck you win a few trades off of your intuition, it's gonna be short-lived. Although the markets will do whatever they want to do at the end of the day, having a trading plan that has a proven slight edge will provide that structure that you need in terms of when to enter and exit the market and just have that controlled environment, which then allows you to remove the emotion out of trading. So bottom line is having a trading plan is very important, and it's one of those mistakes that should be avoided because that's your foundation. Having a trading plan is the foundation for essentially where you're gonna go in Forex. The second common mistake to avoid in Forex is lack of patience. Having patience in general is probably one of the most complicated things to obtain control of, let alone in the Forex market, but in life in general. Because if you think about it, in today's society, we don't even have to wait for anything that we want. It's simply a click of a button off of our phone or our laptop and we have it. We don't even have to get up, go to the store. We literally can buy anything off of the internet from the comfort of our own bedrooms. And we don't even need to go out and meet people or network or have that face-to-face interaction anymore. We simply can just slide a DM, swipe left or right, and boom, you're connected with somebody. Most traders are just too eager just to get into the market and take any opportunity that they see, regardless of their risk. It's like these colorful charts are moving up and down, and they're forming such nice patterns, and it's just so hard for them to resist. But regardless of all of that, patience in trading is extremely important. Most of the time, you'll be sitting and waiting for your trade to happen. Literally, when people say that it's 90% waiting, 10% trading, they're actually telling the truth. And just ask yourself this question. Can you sit and wait for a setup to happen, even if it takes a few hours, a few days, even a week? One thing that ensures a high probability of winning is simply being patient and grasping all of the important information needed before you even enter the trade. It takes a lot of time and patience to wait for the correct setup, because even if you have a good setup and you enter too soon, that can result in a losing trade. So once an individual learns how to be patient while trading Forex, they will definitely see that positive change in their overall trading. The third common mistake to avoid in trading is not trusting your analysis. This is definitely a very common mistake for beginner traders and even experienced traders. Not trusting your analysis is basically you saying that you don't trust your own self. And it's like you don't trust that you've made the correct analysis in order to place a buy or a sell in the market. And it also can mean that you haven't done thorough research or planning. And what happens a lot of times after that is by not trusting your analysis, you end up starting to switch to different strategies. And that definitely becomes a big problem, because if you continue to switch strategies, how will you know which strategy is the right one for you? What you have to understand is, regardless of the strategy that you use, there will always be losing trades. So if losing a trade causes you to quickly just want to change strategies, then you're going to notice that it becomes this never-ending cycle. So the bottom line is that you need to backtest your strategy, and once you become confident in the strategy, make sure that you stick to it and avoid having to jump to strategy. Allow some time for it to play out. Give yourself 6 months, a year, 18 months to really see how that strategy plays out and to see if it's either a good one or a bad one. Because at the end of that time, then if you feel like it is a bad strategy, then you have more information to make the informed decision to change strategies. The fourth mistake to avoid is staying in a losing trade. Now, this is a very psychological thing, because if someone chooses to stay in a losing trade, they're basically telling themselves that this trade is going to definitely go in their direction. It's just going to turn around and it's going to be a winner regardless of anything. And it's like they literally just become willfully blind to what is actually happening in the market, simply because they are so desperate just to have a winning trade.
I'm legally blind, I can see, barely.
And this is when an individual is going to start to see fear creeping in as well. Because when you're watching this trade that is going against you, and it's just going further and further and further against you, and you have no stop loss, no exit strategy, then obviously you're going to start to get scared. You're going to start to feel like you don't know what to do, and then it's just panic that sets in. Even if, let's say, you had a stop loss in place, but as you see the market going against you, you start to move that stop loss further and further away from price action in fear that it's going to hit your stop loss, then you have not accepted your risk. Accepting your risk is so important when it comes to trading, because again, losing is part of trading. Forex is a business, and like any business, there will be times when there are profits and there are going to be times when there are losses. But if you come into Forex believing that you can avoid losing, you are in for a huge awakening. You might as well just donate your money to charity, because at least your money will be going to something productive. So this will correlate back to your trading plan as well, because your trading plan should specifically detail what percentage of risk you are willing to have. So there should be no questioning it. Therefore, if you do not accept your risk, you're not following your trading plan. The fifth common mistake to avoid in trading is not learning from your losses. And like I said time and time before, losing is a part of Forex. And the reason why I'm saying this so many times is really because it's okay to lose. And I know that society is going to, be completely against this, but when it comes to Forex trading, losing is genuinely a part of the process. However, if you lose a trade and you do not go back to analyze why you lost the trade in the first place, then of course there's going to be a higher chance that that mistake will be repeated over and over again, and that's when it becomes a problem. Like anything in life, as you learn from your mistakes, you get better, you grow, you get stronger. That is no different in Forex. The more you review and learn about why you had lost the trade, the higher the chance that you were able to avoid the mistake that led to the loss in the first place. And mind you, this is going to take a lot of discipline, because we're not used to sitting down and reviewing our losses. This is like you're on a professional sports team where they watch film, after every game. win or lose. They watch film and they figure, okay, what did we do? Where are the mistakes? How do we get better? It's the same thing with Forex. You have to sit down and analyze your losses and go back and nitpick and figure out why that happened, whether it be something that happened to you in the day outside of trading, whether it be while you were trading and you just couldn't get it off your mind. You have to take these things into consideration because it's very important to learn from your losses. The sixth common mistake to avoid in Forex is emotional trading. Emotions. They are so annoying. Like, am I the only one that thinks that they're annoying? Because they're annoying. I think that's probably because I'm an emotional person, but regardless, in Forex trading, being emotional is actually a huge deterrent to your success. And being an emotional trader will actually increase the amount of mistakes that you make on both ends of the spectrum. Most traders will lose a trade, become sad, become angry with the market, and then they just want to revenge trade. They just want to go back in there and get all their money back. And you know how that ends. On the other hand, someone might lose a trade and they're feeling themselves. They're like, yeah, I win. Let me go back in and get more money. So it ends up being greed. And you know how that ends too. Remaining neutral and emotionless while you're trading will really make it feel like a legitimate business, because at the end of the day, you really cannot get attached to these micro wins and micro losses in trading, because Forex is a long-term game. Emotionless trading combined with trusting your analysis, being completely patient for setups, and being able to follow your trading plan, which includes being able to know when to enter and exit the market, will significantly up your trading game. If you guys have made it this far into the video, 1, thank you so much. But 2, give this video a thumbs up, because as a bonus, I'm about to share with you a final common mistake in trading. The final common mistake to avoid in trading is paying too much attention to other traders. This mistake is so common, and it's so hard to avoid, because social media is so toxic in so many ways, especially when it comes to Forex trading. And it's really, really unfortunate, because social media has already painted such a bad picture of what Forex really is. A lot of people think it's this gambling, this get-rich-quick scheme. I know it's lack of knowledge and lack of education, but it's still so frustrating, because it's like, how can you avoid these assumptions? So when people, especially, new Forex traders, focus their attention on these stupid Instagram pages that boast these high lot sizes, these high profits, never any loss in sight, it's really concerning, because it's not reality. And don't get me wrong, I know a lot of professional traders who trade with huge lot sizes because they have huge capital to reflect that. But these Forex pages who are showing these results and these lot sizes and all these profits, and then they're trying to get you to come into their program and buy their signals, etc., it's very concerning, because it's very influential to beginner traders. And obviously over time you will start to see and weed out the people who are genuine and who are not, but it's very hard to, and it takes a longer time, because the people who are legitimate are way more low-key than the people who are not legitimate. So that's something that I've personally realized over time through trial and error. I mean, I've spent thousands and thousands of dollars on just different Forex mentors and courses. I would say that 90% of them were legitimate, but the other 10% were not. And it's just sad, because it's just like, it's a waste of money. So the main reason that I wanted to give this bonus mistake to avoid is to essentially just say, stay in your own lane. Especially if you're a new trader and you're watching this, the biggest thing to do is just to focus on yourself. With Forex, it's a one-man game, one female game. It's a one-person game. And, it's you versus you. And that's very rare, because you're not used to this type of stuff in real life, like in the real world. There's no you versus you. Usually you're on a team. Usually, you have people supporting you. Forex is a one-person game. So having the discipline to really put those blinders on and just focus on what you're doing in front of you and focusing on your grind and getting to where you want to go, because at the end of the day, the only competition is yourself. That is what's really going to differentiate the successful traders from the non-successful traders. And like I said, those successful traders, you'll probably notice that they are very low key. If you stay consistent and you just focus on your own stuff, then your results will speak for itself. You won't have to worry about showing so and so, oh, I did this, I did that. You won't have to prove yourself to anybody. And that's the main thing to remember, is that you just gotta do you. You know, do you, boo-boo.
Do you, boo-boo. Do you, boo-boo.
But anyways, thank you guys so much for coming back and watching another one of my videos. You don't understand how much it means to me. For anyone who has any questions, please leave them in the comment section below. Give me some ideas of what you want to see in terms of videos for the future. I'm really trying to get on this consistent, content making vibe, so help a sister out. And yeah, I'll try my best to just get more content out for you guys, more informative content for you guys. So again, like I said before, give this video a thumbs up. Go ahead and click the subscribe button and follow me on all my social medias so we can connect further. I love you guys so much, and I will see you in the next video. I hope you have a wonderful day and life. Mwah. Bye.